Charles Liu. I'm an investor. I have been in China investing since 1990, so I've been here for quite some time.
Great. So Charles, this has been called the Great Fall of China. Some say it's bigger than Greece. Can you give us some context here? How big?
Well, there are two things here. Number one, Greece on the global economy is a sideshow. China is no longer a sideshow, especially to an Australian audience. They know what happens in China impacts on countries like Australia very significantly. I think the Great Fall of China, there've been lots of talk of the Great Fall of China for more than 15 years. I remember a book in 1997 that said, titled The Oncoming Collapse of the Chinese Economy. But look where we are today. The key here, it is a major drop in the stock market, yes, wiping out a lot of valuation, yes, but whether or not the government and the economy can withstand it and the government has the tools to address it, that's the question I would like to talk about, because I think that's the part which is very clear, that the government has the measures, has the tools, has the things to implement that can stabilize the market. They've done it already.
So this is not the big disaster for the Chinese economy that people...
Is it a big disaster? I think actually it's a good thing, what has happened. There are a lot of unintentional consequences and collateral damage, of course. But the Chinese capital markets, or the stock market in general, had been booming at a way that is first irrational. It's worse than irrational exuberance. And secondly, it was beginning to damage the real economy when all the capital went into speculation in the stock market. In most other places, we talk about investing in the stock market. In China, it's speculating in the stock market.
Why is that? Why is it so different in China? What kind of people are buying into the stock market?
Very, very unsophisticated investors who are basically speculators. And that's why you have companies running at multiples of 200 PE, 300 PE, companies that does very little, but at good churning out stories. There's simply not enough analysis of what they are in terms of value.
I've read somewhere that a lot of the bulk of people who are speculating, as you say, actually haven't even finished high school.
Yeah.
Why? Why are they investing all their savings into something that they don't know much about?
Some of them even put tuition in because it was too easy, since the boom began sometime in the middle of last year. It was as if anywhere you threw money, it would double. It would double in 3 months, 4 months, or sometimes in 2 weeks. So it created an aura of quick bucks, making a rich quick scheme that's actually very, very detrimental to the overall economy.
I've read that some people call it herd mentality.
Yes, yes, yes.
And I guess in that way, some people thought they would lose out if they didn't just throw money in.
That's right, and institutions as well. If you're a fund manager and all of your colleagues from different funds are in it and making a very high return, and you are not making that high return, you have to think about losing your job at the next quarter.
So why have all these? Who is to blame for all this irrational and speculative investment?
Whether or not anyone is to blame, I think it is the general mentality of trying to make money quickly, as well as the serious flaws in the entire capital market system that has brought about this. And I think to a partial extent, the regulators of the China Securities Regulatory Agency may have not handled everything as well as they could have.
In what way do you mean not handled things?
Well, you take a look at what happened at the beginning of this year when the market started to really take off. By the time the Shanghai index reached 3,000, a lot of shadow banking operations started to provide leverage or margin to traders, illegally, by the way. And 6-to-1, 7-to-1, 8-to-1 leverage on margin, which is very, very risky to the point of absurdity. And what happened that the regulators knew this was going on but did not address it.
Why?
Well, I think part of it is political. They wanted to show their bosses that the markets are going really well and that the index is going up and so on and so forth. And
I see. So who has been hit the worst in this situation? I know there are a lot of players. I think almost everyone, pretty much everyone, has lost something. But who has been hit the worst?
I think the majority of those who are in the market, who entered the market when the boom really started in March, maybe April, were the ones who were hit worst. Those who followed the herd mentality and was putting their tuition money or grocery money into this, but not knowing what was going on, and came into the market very, very late and just caught the tail end. They were hit. Now, the more sophisticated players, or those who are doing this on a more professional basis, unless they were heavily margined, made money, because the real development or the boom or the blowing up of the bubble started way back to the beginning of last year.
So there are winners here.
There are plenty. There are plenty of winners in this. It's those who did not wait until March to jump in.
I see.
So, because you could see this, there are anecdotal evidence. After March, April, many have taken profit. And this is part of the reason why the housing market has started to come back, because a lot of white-collar young people made money enough to make a down payment on an apartment. And if they put their profits into a down payment, then they were saved from the collapse. So actually, it's a good thing.
And overall, the property market is steady.
It's steadying, and actually, last quarter there were some increases in the properties market.
So what is the current feeling at the moment? Is it still quite bleak? The people who put in their tuition money, are they still really suffering? Or is there some positivity? I know that there's been a lot of positivity pushed. Last few days we saw a 5%, 6% jump.
That's right.
Should we trust this?
The best in many years. I think it is the beginning of a new round, or what the Chinese government would like to call it, the slow bull, instead of a charging, raging bull. Number one, the irrational take of off-market funding, the shadow banking, that's been pretty much cleared out.
And that won't return, you're confident?
It's going to be more difficult to return because the government is going to take a much harder look at the sector, which means the risks will be reduced. And of the, I guess it's more than 50% of the companies which have stopped trade, if you want to return to trading, you will be subject to very interesting scrutiny by the Security Regulatory Agency. And in this process, a lot of the toxic stocks may be weeded out, which would be a good thing. I think it's early yet. The last 2 days is just to bring stability to the market. When you have most of the stocks not being traded, what's left are the really good ones and the blue chips. So of course the index will go up.
How sustainable is this then?
Well, it's sustainable if those who return to the market has been somewhat cleared out. I think that's the strategy, and that's actually quite a good strategy, and I'm quite confident, and I'm looking at returning to the market. So.
But of course, this also means that it sort of undermines the government's sort of intention to let the markets kind of grow more freely. It's kind of now had to regulate.
Well, when you have a crisis like this, in 2008, U.S. government pumped $800 billion or $700 billion into the market, and then to arrange all kinds of M&A and provided government subsidies. Quantitative easing, what's that? That's certainly not free market play. It's printing money and injecting into the market. When you have a crisis, you have to address it. The question is what happens now. I think what happens now is a lot of the transformations which we were hoping to accelerate in the Chinese financial system may be slowed down a bit. The internationalization of the RMB, the opening up of the capital account, and the new registration system for listing. And these will be slowed down, but I think they will continue to proceed.
How did you react to the measures? Are these desperate measures for desperate times, or did you think they're quite reasonable, quite moderate?
Well, they have to address basic audiences. One is the really, really unsophisticated investor or speculator group, which is probably the bulk of those who have trading accounts. Two is to protect the financial system from potential systemic risk. And three, not the least important, is the global image and standing. So it's not easy to be able to manage all of this and return to a new normalcy or normality. And I think they've done that. But I think your question is important in that if you sift through all the measures which have been taken, and there are just too many to enumerate here.
One every day.
Or several in one day. What you will see is that they're actually addressing different issues, different audiences, and different problems.
So these speculators, these unsophisticated investors, will they ever see their tuition money back, their savings?
I think those who chase the CNEX market, the 创业板, which is the equivalent of China's NASDAQ, those who chased it will have some problems. But those who went after the Shenzhen board of small, medium-sized companies, there's some seriously good companies there. So they could return.
So it depends
in terms
on
of
how
value.
unsophisticated or versus
Exactly, and whether or not they actually looked at the companies they invested in.
What's your feeling? Do you think they did?
In most instances, they did not.
What did they do then? How did they know where to put their money?
Well, they hear rumor from Uncle so-and-so that, this company is really going to do well. That's it. Unfortunately, that's what happened. But I think it's also a very good educational process for those unsophisticated investors.
Painful educational process.
It's called paying tuition.
Last thing, where to from here? When are we going to see these all these measures lift? When are we going to actually see the stock market return in full force?
I say between 3 to 6 months. I think now is building a new base and creating a new normalcy. And on that basis, it will move forward. And the clearing out some of the toxic companies, I think will be really quite interesting for the market.
So no collapse of China just yet?
I'm afraid not.
Mouse, keyboard, fingers, eyes, that kind of thing?
Oh, you want close? Okay.
Nangawa yesterday proposed to have the Chinese currency, the RMB, as legal tender in Zimbabwe when he met his Chinese counterpart, Yuan Chao, behind closed door yesterday.
What an amazing idea.
Isn't that amazing? So instead
It's
of
not completely impossible, too. Off the record.
I can tell you, friends in the shadow banking business told me they're swamped with phone calls.
Yeah, I agree.
As well, it's the Chinese market. When people invest, it's not most of the households here only invest like 15%, isn't it, of their assets. It's not this investment of